Hey everyone, in this video I'll be updating my Disney stock price prediction for 2024. My previous stock price prediction is obsolete now since Disney's stock price has exceeded those expectations. Of course, I'm happy about that because Disney is one of my top stocks to buy right now, and if investors followed that recommendation to start the year, they will have made money on Disney stock, which makes me happy. So in this video, I'll update that previous price prediction and I'll let you know where I think Disney stock price could be by the end of the year. So let's jump right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so to make this stock price prediction, I'm going to need a few of Disney's numbers. Number one, I need Disney's price to earnings ratio. And this metric has been volatile for Disney given the massive disruption to its business during the pandemic. So, in order to take out or reduce some of that volatility, I've also incorporated Disney's average price to earnings ratio for the last 10 years. So the PE ratio right now is 71.66. The average ratio over the last 10 years is 41.7. So I'm going to keep both of these in mind when making my stock price prediction. I also need Disney's current share price, which is at $116 per share. When I recommended Disney stock as a buy or a top stock to buy for 2024, it was trading at closer to $88 per share. So you can see the nice increase in Disney stock price already for 2024. Needless to say, I still think there's room for increase for Disney's stock price. Now, when I did this video, a little over a month ago, when I made my first Disney stock price prediction for 2024, I suggested the stock price could reach between $96 per share and $101 per share, between $96 and $101. So when I did that video, the stock price was still trading at close to $88 per share, suggesting an upside of around 10% for Disney stock for the rest of the year. Now, that was at the midpoint. Of course, there could be much higher upside, but that was just my best case outcome, or not best case, I should say, base case, the most probable outcome I suggested could be at around 10 to 12% increase for the year. Now, I need to update that because, of course, at $116 per share, it's above my target of $101 per share, even at the high point. So I need to update that recommendation. So what changed? Why did Disney's stock price exceed my expectations? Well, it's all about earnings with Disney. It's all about profit. Their profit prospects have been improving significantly in the last year and the current year as the company's recovering from two major factors. Number one, of course, the obvious one, the pandemic, where its parks and cruise ships and hotels had to close down temporarily. That brought down profits significantly. Now, those segments, the theme park segment, is absolutely thriving, doing better than where it was in 2019 before the outbreak. So that part is booming. The second part of the business that it's recovering from is the transition to streaming. That hasn't been an easy one for Disney. That hasn't gone as well as planned for Disney. But the management team did say that by the end of 2024, that segment will be profitable. And so those decreasing losses in the streaming segment has been boosting profitability for Disney. And that is going to be an even more significant driver for profitability in the next year. But let's focus on 2024 for now. Its current earnings per share estimate is for $4.64 for the year. And you could see that's up from $4.30 60 days ago and $4.38 90 days ago. So these estimates have been moving higher as the year has moved forward. Analysts have become more bullish on Disney stock. Now, Disney stock is not without risk, and I acknowledge that. Its movie theater performance has not been strong. The latest several movies have been flops at the box office. Well, I shouldn't say flops, but they haven't been up to Disney box office standards, right? Disney's used to putting out multiple films in the theaters that generate billions in box office sales. That hasn't been the case with its recent movies, so that's been a headwind to Disney. Nevertheless, despite that fact, The company's profits are thriving mostly because of the other factors that I mentioned earlier. If it gets that part of its business back up to full strength, that's going to just be a catalyst for even higher profits for Disney going forward. So now that we have the estimates, we can go ahead and plug them into our valuation model and come up with our prediction. So if everything remains the same, $4.64 in earnings per share, and its price to earnings remains at $71.66, Disney's stock price could rise to $332 per share. Admittedly, this is a scenario I see as highly unlikely, given that it's currently at $116 per share. I don't expect Disney's stock price to triple in the year. That's not a likely outcome. Now, I do think its price to earnings ratio is going to fall closer to its average. That's why I brought up that average in the beginning of the video when I highlighted it. So if the price to earnings ratio falls to 50, then Disney's stock price could rise to 232. If the price to earnings ratio falls to 40, which is the average last 10 years, 41.7, falls to the average, then the stock price could rise to 185. If the price to earnings falls even further to 30, then the stock price could rise to 139. So all of these scenarios has Disney's stock price improving from where it is today at 116. In order for Disney's stock price to fall, I would have to lower this price to earnings ratio down to 20 for the stock price to fall to $92.80, which is one of the outcomes that is possible. This is not a 0% chance probability. Disney's stock price could fall in the year. It doesn't have to go up, even though my estimate is for it to go up. One of the outcomes is that it could go down. That's a very realistic outcome that could happen throughout the year if the theme park segment stops thriving the way it is. If the streaming transition becomes even more challenging, then the stock price could fall instead of rising for the rest of the year. Nevertheless, I do expect Disney's stock price to rise for the rest of the year, and I think it's going to be somewhere in between this 30 PE and 40 PE, given that the average for the 10 years is 41.7, and given that the average is unrealistically lifted higher because of those changes during the pandemic where its earnings collapsed and the stock price remained relatively high. And so that created a much higher price to earnings ratio because Wall Street was anticipating Disney's earnings would rebound quickly. So a V-shaped recovery, which is what's happening. But that temporarily increased its price to earnings ratio. So it would be reasonable to even adjust down the average from 41 down to something like 35 or 32, given the spike in PE during those brief moments following the pandemic. So that being said, I think Disney's stock price by the end of the year will be somewhere between the 30 and 40, and I think the stock price will be somewhere between $135 per share and $145 per share, which leaves some upside from where it's at now, from $116 per share, a meaningful upside from where it's at now. So for those reasons, that's my prediction for Disney stock price. And let me remind you, Disney stock is on my list of stocks to buy. It is a buy rating in my opinion. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.